Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you have a fantastic and phenomenal day. Taking a quick look here at Cardano, seeing what's going on. We're going to jump into the back-end data, see where we're at here with the liquidation levels. Just really help understand, the foundation of what's going on here with this coin. So if you're new to the channel, please do me a favor, like, subscribe, and follow if you haven't already. And deeply appreciate that. You want to become a better trader though, cryptocash.tech is a site linked down below where I have for trading academy, community, and signals group. Going that's on our Solana, Filecoin, and AVAX trades. We took 20%, 30%, and 40% for each one of those over the last couple of days. So it's been a really good experience. Congrats and thank you so much for the wonderful feedback. So let's take a look here at Cardano. So we can see a lot more shorts entering the market, about 7 cents even and below. So between 69 and 7 cents as a rough estimate, we can see some levels of liquidation there. So we want to kind of pay attention to that and kind of see where that puts us. But the heaviest amount of concentration of liquidation, honestly, is right down to about 62 cents. So not a lot of people are taking longs right now, is kind of what we're looking at here with a low amount of leverage. So again, probably some older longs in the position here, kind of watching and waiting to see what should happen next. But that's generally what we're looking at in the 7 days. If you look at the 12-hour time frame, we're going to see a lot more liquidation levels above and below the price action. Again, there's that 68.5, and of course 65 cents even as the next level. So keep in mind, if you're in a trade right now and you have a stop loss really close to 65 cents, you may want to consider adjusting that because that's a heavy concentration liquidation. The price action could wick down and stop you out, so to speak. Again, I have an alert here set for roughly that 65 cent mark. That's when I was planning to get in from yesterday. We never quite got that alert triggered, but it does look like we're pivoting and bouncing off this ascending trend line, so it may still be worthwhile to get into this trade. Let's double check that. So double checking on the daily time frame, working our way down. We want to confirm a couple of things here. First of all, we've talked about this previously, the 20-day SMA being a somewhat of a resistance level. That's right there above the trend, above the current price action at about 69 cents. And of course, we've got this ascending trend line running moderately concurrent with the 50-day SMA. You can see that in smaller time frames, but generally speaking, this is a positive scenario overall. Being below the 20-day SMA doesn't necessarily mean it's bearish. It just implies we want to pay attention to see because there's potential for the price to pull back further. Okay. Good news is we retest that level, and we're going to go ahead and possibly see if that level could be retested once more. Taking a look at the daily, though, here, we're getting close to 50 on the RSI. Breaking above this will be bullish. Staying below could be bearish. Now, I say could be because of the fact that when you're really close to 50 on the RSI, it's not like it's an exact line in the sand where it's like, okay, I'm below this level, I'm bearish. You don't necessarily think about it that way, but you should consider the fact that that's a resistance range, and getting above that would be positive. Okay. Money flow index is higher than the RSI. That's a very good takeaway here. And stochastic swinging up for the second time, letting us know this little momentous trend has been beneficial. We can also see this level here about 66 cents even. This 0.382 fib level working as a tentative resistance, but we keep retesting it, more likely to break. And the same thing here with the MACD. It's converging, looking pretty nice here, but hasn't fully converged yet. Okay. So we take all that and then we look at our larger time frame here and we identify how much volume we have in this current range. We can see heaviest amount of concentration of volume between 60 and 62 cents. And where is that currently on the price action? That's below the price action, therefore reinforcing that support between 60 and 62. So the likelihood of Cardano going below that level is fairly low, considering the overall sense of what we just looked at here. Right? Things are fairly bullish. We got that support range. Gives me more confidence in wanting to take a long with this coin. I was pretty heavily considering a long position yesterday. At this point, I think I still am, based on that metric being kind of a larger macro beneficial situation. Okay. Again, is it a guarantee? No, because you zoom in a little bit, you'll see a resistance here at about 73 cents. With the more recent range, if you only consider this is roughly the last month's worth of trading, we can see there's a resistance up here at about that golden pocket, that 0.618, 0.65 level. So this area here we want to kind of pay attention to, right? Again, it depends on where you zoom in and zoom out to, but that's generally what we're looking at. We can also see the 200 and the 100-day SMA working as a resistance here for now, but also the 20 and the 20 and the 50 working concurrent with ascending trend. So I personally like trading coins that are in this situation here because these smaller moving averages that move faster are more beneficial in the overall sense of reversing the trend. Now, again, these are going to be larger resistance levels, but the more we test them, the more likely they are to break, right? And we've already tested them 3 or 4 times in the last 12 to 24 hours. So that's a very positive sign here. And with this candle wick here so far, that's looking pretty solid in the last 2 hours. Now, however, what we want to double check here is a couple of things here, right? RSI, MACD, money flow index, all these things are kind of coming down a little bit, but these are not in terrible shape. right? It's very natural for these to pull back. So when these things do pull back, the common area of consideration would be when the 50 is tested here, just say for the RSI, that's a good consideration for a long position, pending other things are still present, right? As long as we're above the cloud, in my personal opinion, those things are very positive confirming factors. Okay. Again, I'm not going to sugarcoat it and say like, okay, these things pulling back right now is great. But it's also very good considering, because if you look at the price action, staying right where it's at, that's a very positive sign considering these indicators are pulling back. So when you get a slow reset for these indicators and the price maintains its current level, that's extremely positive. It's what some might refer to as a hidden bullish convergence. I don't like that term because it's not very hidden if you can see it on the charts, but generally speaking, there's different lingo for different things. Okay, so looking at the hourly here, we're confirming above majority of the moving averages. Taking a look at the cloud here, we can see lagging span coming in the price action. So generally speaking, if you have a long position open, you may want to consider taking some profit. Lagging span the conversion line and the baseline, they're kind of intersecting, generally implying that we have a slight indecisive scenario here. But to me, it seems pretty decisive. If you take a look at this more recent high, we wicked down to test that more recent high as a new low. Okay? So it's happened a couple of times here, right here, reaffirming that lower level. Now you could even argue, and I know there's some people that are like, oh, I see a head and shoulders pattern forming. That is true, but again, smaller time frames provide less consistency with those patterns. We've determined that we have a solid amount of support between 60 and 62 cents. Heaven forbid we get a smaller time frame head and shoulders pattern that could very well play out. We could very well see also a nice pivot and nice bounce off more recent support levels too. Okay? So again, these are just things we kind of like to pay attention to. Is this an exact science? No. And what we could do here, honestly, as well, just double check some newer fib levels too, since we got a tentative top in here from yesterday's candlestick close. I'll go ahead and post this layout chart on our Twitter, Telegram, Discord, but generally speaking, these are all positive confirming factors here. We're closing above 0.382, and we're in a scenario here where these levels here are going to likely be able to hold, pending Bitcoin doesn't drop super hard, super fast. I think if Bitcoin can maintain 69 to 70,000, we should be in pretty decent shape to see Cardano continue further up. Just kind of what it looks like here. So I would say that Cardano has much more potential for the upside than downside. Just once again, make sure that you use low leverage, low position sizing in these situations here, because the market is not confirmed bullish or bearish. We're in this weird transition with Bitcoin, and if it continues to, if we close above 70K this week, I think we're going to be in good shape. Close below, maybe not. We got a CME gap between 64 and 66,000 as a rough estimate. Those are all things we need to consider and take into consideration. However, just say pending, Bitcoin does drop down to the 65K range, I feel as if Cardano should have enough sustainability to maintain 60 to 62 cents. It would seem sensible based on the overall trend that we're seeing here. We'd still be making higher highs and higher lows at that point. Again, conversation for another day, but at this point here, I do feel like Cardano is a solid consideration for a long position at this point. Is it the best case scenario? No, but it's definitely a decent option just based on the macro here. I like the macro for Cardano a lot right now. So that's kind of where I'm at. Again, I'm more of a swing trader. If you're a day trader and you're like, what the hell is this guy talking about? You probably shouldn't be watching. Not to say that's bad. You still need to know the macro leading into a day trade. You have to know that. In fact, that's pretty much the foundation of being a good day trader. However, these things may not matter to you too much if you're just going to be jumping in and jumping out, doing a little inverted cup and handle pattern on the on the 1 minute chart, right? Those things are all different than what I'm providing for you here. I hope this made sense though, and you did get some benefit. Do me a favor, if you could, like, subscribe, and follow. Deeply appreciate that. Hopefully you can join our crew. We got a really awesome trading community. It's also included with trade signals and, of course, my trading academy. You have to watch those videos, folks. If you're part of the membership, stick around and watch those and make sure you learn what you can. If you're not learning, you're not growing. If you're not growing, why are you trading? It really makes no sense at all. You can't piggyback off of others for too long. It really isn't sustainable. I hope you learned something again. Thank you so much for everything. I hope you have a great rest of your day. We'll see you on the next one. Take care.